Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, November 14th, 2019, and we again find ourselves in the final hour of the trading day. I mention this each day, but in my opinion, the most valid prices, the best prices to make your buying and selling decisions from are the prices that are as close as you can get them to the close of the market or the end of the market. And the reason I say this is because during the day you have the algorithms, you have the day traders, they're in there trading, lower volume. I consider it a lot of noise. At the end of the day, you have the large financial institutions, you have the market makers coming in with size, and in those last few minutes of the markets, that's really when they move the market. So I consider them the smart money, the most well-informed money, and so I make the majority of my buying and selling decisions based upon the price that I can, the price that is as close as I can get to the end of the day. That being said, I did just mention that I do the majority of my trading, but I actually did make a day trade today. I thought it was a good setup and a good example to show you, so I did go ahead and take the trade. So I will show you that a little bit later. So anyway, thank you for coming by today. I appreciate it. I appreciate you coming and investing your time with me. There's a lot of other things you could be doing, but you're here, and I really do appreciate that, and I hope you're getting some value from this channel. I hope that you're getting an investment on the time, or a return on the time that you're investing with me. So if you have any questions today during the day, please let me know. Happy to help you out. So all right, well, the market is kind of been all over the place. We were up higher, then down lower, and now we're coming back a little bit. So Dow's down about 14 points, not much. NASDAQ is down 6.8 points, pretty flat, and the S&P is almost not quite a point, so up 0.03%. So been kind of wobbly lately. The last few days, you know, we're at a pretty high level here. We're into some overbought levels. So anyway, we will check things out today, and we'll see if there's anything interesting. So let me just take a look. Hey, Evan, good to see you. Thank you for coming. I appreciate it, Evan. Good afternoon to you too. And if you have any questions for me, please let me know. Hi, Steve Burns. How you doing? Steve Burns says, Greg, thanks for doing this live cast every day. Steve, thank you. That means a lot coming from you, bud. I appreciate it. And you know, a big part of why I do this live stream every day is because I met Steve and I studied under Steve, and I learned so many things, you know, in conjunction with some other approaches that I used from other mentors and coaches. But, you know, Steve's had a huge effect on my trading. I think he's just the best guy. You know, what a great author, trader, educator, mentor. And it's always an honor, Steve, to have you in here. And I'm always excited about it. I know everyone else is too. So thank you for everything you do. And Gamer Squad, hey, how you doing, Gamer? Good to see you. What's going on with you? Any trades, anything exciting? So all right, well, the plan for today, as usual, is first of all, we're going to go ahead and we're going to run the US legal disclaimer. We're going to come back. We're going to take a look at all my current positions. And we're going to talk about when I bought them, why I bought them, what methodology I was using, what my thought process was when I bought them, and then how I'm going to manage them going forward, either to the upside or the downside. Then, as always, we're going to spend a few minutes talking about some principles of trading psychology. As you guys know, guys and girls know that I believe that keeping your emotions in check is probably the most important skill you can learn in trading psychology. And when I say trading psychology, what I'm really saying is managing your emotions. Because if things are going well, you know, a lot of times you'll trade well, but when they start going bad, that's when your emotions start amplifying. That's when you get that fight or flight mentality, or you get frustrated, and that's when most people start making bad trading decisions. And when I say bad trading decisions, they deviate from their trading plan. They position size too large, they let losses run too far, and that's a rocky road, everybody. So it's, you know, in my opinion, it's always important to position size correctly and conservatively so that your emotions can't go on these wild swings and you don't put yourself in a position to make bad decisions. You know, I was watching this documentary on the Amish, and you know, when they're dating, they cannot even like shake each other's hands or like literally even, you know, touch their shoulder or anything. And, you know, they were asking him why this is. And they said, well, because, you know, one thing can lead to another. We don't want to put them in a position where one thing might lead to another, right? They want to wait for marriage. And listen, that is so similar to trading. Of course, you know me, I look at everything related to trading, but it's true. Not in the Amish way of, you know, shaking hands with your girlfriend or your boyfriend, but putting yourself in a position where things can get out of hand and your emotions can run away with you. So anyway, I saw some correlation there, so I thought I'd mention that. Pretty interesting how the Amish live. Fascinated by it, to be honest with you. Anyways, so yeah, we're going to do a little bit on trading psychology. After that, we're going to go through my watch list. We're going to look at each stock. We're going to go through one by one. We're going to analyze the support, resistance levels. We're going to take a look at indicators like MACD, RSI, moving averages, ATR channels, and you know, I look at indicators as potential groups of buyers. And if you want a stock to go up, it's important that you are in the company of other buyers. And so if one indicator means one group of buyers, if you can find a setup that has 2 indicators, 3 indicators, well, then you have the possibility of 2 or 3 groups of buyers coming in at the same time. And again, if you want a stock to go up, you have to be in the company of other buyers. It's just that simple, right? So we're going to go down, we're going to take a look, we're going to see if we find some confluences or combinations or good signals. We'll mark those, and then as we get closer to the end of the day, we'll go through each one with a little bit more, with a little finer tooth comb to really look at the details, because just because you have a good setup, you have a good confluence of indicators, doesn't mean it's an automatic go on buying it, because once you find the setup, or the confluence of indicators, then you also really have to analyze what the risk to reward ratio is. And, you know, it's important in trading that you have asymmetrical risk. So if you're wrong small. If you're right, you can be large win. You can have a large win. So, you know, for example, I'm going to risk $100 here to make 200 or 300. Okay, well, that's good. That's a good asymmetrical risk. But you have to keep in mind that you have to look at the technicals in order to make that determination. I mean, anybody can buy anywhere and go, okay, I'm going to risk $100 to make 300. And if you lose 100, you get out. And if you win 100, you get out and you're happy with the trade. But that's a little subjective. You have to base your risk to reward ratio, in my opinion, on support underneath you and resistance above you. So anyway, we'll go through, we'll take a look, we'll see if there's something interesting, and if there is, I will go ahead and purchase it at the end of the day. And then after the market closes, if anybody has any questions for me, if you need some clarification on anything I mentioned today, please just let me know. If you'd like me to take a look at any particular stock symbols, I'm happy to give you my humble opinion. And if you feel like there is a stock symbol that possibly has an interesting setup that would be beneficial for the group to take a look at, go ahead, put it in the live chat, maybe put an asterisk by it or something, so I know it's kind of time sensitive. All right, so that is the plan for today. So anyway, hang tight. I'm going to run the US legal disclaimer, and I'll be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okie dokie. So, Toby Petty. Hey, Greg and everybody. Hi, Toby. Good to see you. Thank you for coming. Appreciate it. Christopher Hitchin. Hi, Greg. How you doing, Christopher? Good seeing you, and thank you for coming. I always appreciate it. Marco. Hi, Greg. And I joined this. Hi, Greg, and I joined the Steve, and thank you for doing this. You are welcome, Marco. Okay. I understand. You joined Steve in thanking. Yes, you're certainly welcome. I hope it's helping, guys. I mean, I did start this channel honestly because I have seen so many people blow up their accounts, negatively affect their lives, and it didn't have to happen. It didn't have to happen. All they needed were a few basic principles, essentially in a nutshell, cutting your losses short and letting your winners run to a point. But most people blow up their accounts because they hold on to a loss. And so, I really felt like I had a lot of knowledge over the last 24 years. I've studied with some really fantastic mentors and teachers like Steve Burns and Dr. Alexander Elder, Carrie Lavorne. And I just thought, I enjoy trading. I enjoy teaching. And I'm going to start this channel and hopefully it will help some people. But ironically, it has helped me as well because, I try to set a good example for everybody. And so it's helped my trading as well. I've been much more conservative because I want to set a good example. So it's worked out for me as well. So hopefully it's been a win-win. Frank says, hello, Greg and all. I love this quote from the Roman philosopher Seneca, luck happens when opportunity meets preparation. Yeah, isn't that true? My mom used to tell me something very similar to that, Frank. Yeah, it's amazing. It's amazing how lucky you get when you work hard, right? And you have to work hard in trading. And more importantly in trading, I mean, yes, you have to learn the skills, you have to learn the setups. But again, the skill that's most important is being able to stick to your plan and execute your plan and overcome those dang emotions. Christopher says, I like the quote, chance favors a prepared mind. Yep, there you go. There you go. Very similar. Hey, Christopher Ewell from 10 Minute Stock Trader. How you doing? Good to see you, Chris. Thank you for coming by. And in case people have not heard of Christopher Ewell, he has a great podcast called 10 Minute Stock Trader. I was a guest on that show. He has a great YouTube channel where he posts all of his YouTube channels. Let me just, let me see. Let me just share this over here. So, oh, good. This is out. So this is Christopher right here. This, of course, is our friend Steve. I knew that they had just done a, oh no, this must, you guys just did a recent, oh, here it is. It's premiering tomorrow. Okay. The Ultimate Risk Management Guide where Christopher interviews Steve. So very interested in listening to that. Looks like it's coming out tomorrow. But yeah, if you guys haven't subscribed to Christopher, go to his website or go to his YouTube channel, Christopher Ewell, 10 Minute Stock Trader, and he has some great content. And so glad you're here with us today, Christopher. Thank you so much for coming by. All right. Oh, I lost my place. Frank, I purchased info at 70.21. Looks to be squeezing. Well, let's take a look. You bought it at 70.21. So it looks like you bought it maybe, I don't know if you bought it yesterday or today. I could see buying it yesterday, breaking above this little range here. Fantastic. Nice trade. Nice trade, Frank. Where are we at? 63 RSI. Was able to take out these previous highs, which was resistance. So now that should be support underneath you. Congratulations. I love when you guys share your trades and they're profitable trades. Fantastic. Fantastic. All right, well, let's get to it. I do have some interesting kind of trades here to show you, a few different things out of the norm, but let's start with let's start with Dollar Tree. So I did buy Dollar Tree yesterday on the 13th of November. I bought it because we bounced off the 30 RSI intraday, closed back above the 30. We rejected the third ATR channel, closed back up into the channel. We also thoroughly rejected the 100-day moving average, closed back above this. And we also, cherry on top, had a V1. This is day one. The close is right here in the red, so you probably can't see it. So yesterday we washed out. We went below yesterday's low, closed higher. This is important because it shows us that there were no more sellers. There were no interested sellers down at this price. There were more buyers than sellers. And doesn't mean it cannot go back down, but it does give you some good recent information to show you that the market just recently rejected this. So if it just recently rejected this, it maybe doesn't want to go down there anymore and maybe wants to go the other way. So that's the idea. Doesn't mean it's going to hold, but it's more knowledge than you had before. So bounced right at the 30, and then closed much higher, rejected the third ATR channel intraday, closed back into the channel, rejected the 100, closed back above the 100, and had the V2. My stop on this trade is going to be a close below the halfway of this bar. Whenever you have a large bar, I call this the washout bar. From a Fibonacci standpoint, you should have, on up bars, you should have some support at about halfway of this bar. So, you know, tomorrow, if we close, not intraday, but if we close below halfway of this bar, this is the red line, the Fibonacci number would not hold, and I would go ahead and get out of the trade. We were fortunate to get, let's see, the high was 109.33. My initial profit target, or my first profit target, was 109.30. So took a nice profit, took some chips off the table, right? The reason I like to scale out is because when the market does go my way a certain amount of distance each day, I do like to take some profit and take some of my percentages of shares off. And so I took this off here. Market can't take that back from me, locked it in at profitable levels. If we do go down and it turns right back around on us and taking a loss, at least I took a percentage of my shares off at higher levels, and then have fewer shares when it goes down to mitigate my loss if it goes down. So hopefully it won't go down. We are just about even to where we bought it. I bought it yesterday at 108.43. It's at 108.47. But again, I took about 10% of my position off here at 109.30. And that's one of the reasons I like to phase out. Going forward, if we move about 1 ATR distance from my entry, I will start implementing some kind of trailing stop, like a close below the previous day's low. If it continues to move up, I will continue to scale out. If we reject something serious above us, like the 50-day or the 50 RSI up here, if we went up intraday, close back below, that would also be a signal for me to lock in my profits. So I'm going to phase out till I reject the 50. Then I would get out. If we closed above the 50, I would continue to hold the position until we close back below. On the downside, we have not moved 1 ATR yet for my entry, so this is still my initial stop. If we move more than 1 ATR, then I'll start implementing a trailing stop like a close below the previous day's low. Okay, Johnson & Johnson. This has been a tricky one. So I did buy this back here on the 5th of November. I bought it when we had this higher low V1. Here is day one, day two, washed out day one, similar to what I just showed you on Dollar Tree. Washed out, closed back above day one's close. This gives me a V1. It's a higher low V1, meaning that we closed below the 1 ATR channel, rallied into the channel, had a bit of a pullback, tried to go down the day that I bought it, then reverse back up, moved nicely for us for 3 days. I did take profits as it moved up here, here, and here. So locked those gains in. It did move more than 1 ATR for my entry, so I implemented a trailing stop. Trailing stop was a close below the previous day's low. A couple days ago, barely closed above, so I kept it. Yesterday, closed above, so I kept it. Today, This is a little different. I don't ever like to have winning trades that then turn into losing trades. So what I did today was I went ahead and when it hit my, you can see it was much lower earlier, but when it hit my entry point, I went ahead and just took the stock, took the position off. It's higher now, but the only reason I did this is because, like I said, once I have a profit, a nice profit in the trade, the worst thing that can happen is you let a nice profit turn into a loss. And I didn't know whether or not today we were going to be able to still close above yesterday's low, but it's just one of my rules. When I have a nice profit, but I don't have a formal exit, I don't have a formal stop loss that happens. If it's moved up nicely and then gets back to my entry, I'm going to just take it off. So was it a profitable trade? It absolutely was, because I took profits here, 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 and here. And then when it got back to my entry point, I just took the rest off. Now, if it goes screaming up tomorrow, oh well. I mean, I might have a V2 tomorrow. Here's day one. Day two certainly has washed out day one. Tomorrow, if we close back above day one's close, I may re-enter. But, it's always a bad feeling when you have a profit in a stock and then it turns into a loss. And I didn't want that to happen. So I just got out of my remaining shares at break even, and the shares that I did scale out of were profitable. So anyway, thanks Johnson & Johnson. Kind of a bumpy ride, but profitable trade. SPY. All right. The all famous SPY trade, everybody. So listen, I know you guys hear this every day, but in case we have some new viewers today, I do want to quickly go over why I make this trade every day. This is a trade I make every day. This is from Liz Ann Saunders at Bespoke Invest on Twitter. She's a chief financial officer of chief investment officer at Charles Schwab. But this is a good back-tested approach. It does not take into account technicals whatsoever. In this back test, there are two options. Option number one is you could buy the SPY, each day at the open and then sell it at the close. If you did this every day since 1993, buy at the open, sell at the close, buy at the open, sell at the close. For all your work and troubles, you would have actually returned a negative 13.9%. However, if you did the opposite, which is what I do, and buy the SPY each day at the close and then sell at the next open every day since 1993, you would have actually returned a positive 634.2%. So, which approach do you think you would want to allocate money to? Buying at the open, selling the close, or buying at the close, selling at the open? I mean, look at the difference. Look at the difference on the chart. Blue line is the buy in the afternoon, sell in the morning. Orange line is the buy in the morning, sell in the afternoon. Clearly, this is the better choice, right? And I do like this chart a lot because it shows if you have an edge in your system, what it can look like in the long run. If you stick with something, I mean, you can just see it. It definitely has an edge, and that is why I trade it. In between, there's ups and downs. These are totally normal, totally to be expected. Things don't go straight up. Casinos win money. Their profits don't go straight up. They have ups and downs as well. So, just have to make sure you're okay with ups and downs. And the best way to do that is to position size conservatively, appropriately, so that if you do have a drawdown, it doesn't have too much of an effect on your emotions and you can stick with something the long term. Imagine if you started here, loaded up, didn't have very good results for 2 years. You would have lost a lot of money and been very disgruntled, and you probably would have quit somewhere down in here. But if you position size correctly so that it doesn't affect your emotions too strongly, you have a nice up. Oh, you have a drawdown. Oh, now we go up. Now we have a drawdown, right? So I've been using this since February 26th of this year. And just a few days ago, made an all-time high with this trading approach. So with that being said, and that big buildup, you would imagine that I would have a huge win, right? No, I bought it yesterday at 309.10. Sold it this morning at 308.77. So lost about 34 cents or so overnight. But that's what happens. I just showed you the chart, right? It goes up, then has ups and downs and ups and downs. during the month of November, we just did really, really well on this. Just gap up, gap up, gap up, gap up, gap up. And now, starting to move sideways a little bit. Made a little bit yesterday, lost a little bit today. But that's just how things go. I mean, we may have a drawdown during the month of May. I lost 80% of my trades, my overnight SPY trades, but I didn't quit. I didn't allocate so much money that I got disgruntled and frustrated and quit. I kept at it because I know that, long term, it's shown to have an edge. Does it mean it's going to have it in the future? No, it doesn't. But again, I'd rather allocate my money to something that does have a good back-tested approach. So anyway, a small loss on this. I will be buying this again at the end of the day. All right, VIX. I did buy VIX yesterday at 1846. We went under the 30 RSI and then closed back above the 30 RSI. That is a signal for me when we go under either intraday or on a closing basis, and then on an intraday, if it goes under and back over, I would buy it. Yesterday closed below 30. 2 days ago closed below 30. Yesterday stayed above 30. And you can see I did hit one profit target today, which I'm glad, right? So I did take some off at profitable levels. It has reversed on me. We're at a 29.51 RSI. So if this does close under 30, I will go ahead, just take the small loss. But again, very thankful that I hit the one profit target because I did lock this in at profitable levels and it mitigates my loss down here. I had the same trade here when we went under 30, over 30 on intraday basis. Went up, hit some profit targets, and then I got out here when we closed below the previous day's low. So it was a nice trade, nice profitable trade. Good thing I did get out when it closed below the previous day's low. That was my plan, so I stuck with it, and then since then it's gone down, 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 but it did trigger again yesterday. So as long as this closes under 30 today, I will go ahead and get out of the position. All right, XLRE. This was a nice looking setup yesterday, similar to Dollar Tree. I did buy this yesterday at $38 even. I bought it because a lot of things actually. The previous day closed below 30 RSI. On the day that I bought it, it closed back over. That's my signal. Close under, close above. That is one signal. Second signal is 2 days ago, it was under the third ATR channel, closed back over the third ATR channel. And in addition to that, we had this nice sideways movement. We had a false breakout to the downside, and we triggered a V2. So remember, 90% of prices hold and stay above this third ATR channel. So something's below it and then goes back up. That's good. That's a start. In order to go up here, we have to get through this third ATR channel. But I would not have bought this just solely based upon it going under and over the third ATR channel. I needed some other confirming signals, but I did have the signals. V2, here's day one, here's day two, here's day three. Day two washes out day one, day three closes above day one, giving us a nice, sidewards movement, and then a nice V2, false breakout to the downside, under the third ATR channel, over the third ATR channel, under the 30, over the 30. So this is what I'm talking about as far as confluence of signals. So we did buy it yesterday. We did hit one profit target today at 38.19, actually exactly where we're at. So I did take some profit off the table. It has not moved one ATR yet. So my stop is going to be halfway of this washout bar of the V2, right? So glad took profit target there. Here and here are my next profit targets. I don't know if we're going to hit those today. We'll see. But I always like taking profit targets because I lock in at higher levels and it mitigates if it does go back down against me. Yesterday, I had mentioned that I did sell some puts on McDonald's. When you sell a put, basically what you're doing is you're selling premium. You're getting premium. You pick a strike price, and if you're selling a put, as long as the price stays above that strike price by the end of your contract period, you keep the entire premium. When I sell premium or I sell puts, I like to look at my possible setup in 3 different time frames. This is on McDonald's. If I look at this on a monthly, I did sell the 180 strike price. So as long as this stays above 180 by December 13th, I'll be able to keep all the premium, which is about $35 per contract. So I do like on the monthly that we're smack dab in the middle of the value zone. On the weekly, that $180 price lines up very close to the 100 week moving average and the 30 RSI on the weekly. And then on the daily, very close down here to the 6 ATR channel. And if you getting down to the 6 ATR channel is very hard. It does happen, but this is an extreme price move. So anyway, I did take this, did want to share that with you, but yeah, as long as McDonald's stays above 180 by December 13th, I will be able to keep all the premium that I sold. If not, I will be required to buy this down here, but I don't mind buying it down here at 180, you know, if I have to. And then lastly, all right, this doesn't happen very much. But I did take an intraday trade today, and I thought it was a really good example of, and I'll show you why. This is Facebook on the daily, but you see this big, large bar, larger than 1 ATR. Whenever you have large up bars like this, generally from a Fibonacci standpoint, you will find some support at the 50%. And you can see it moved up 50%. You can see the dotted line here. This is about 50%. So when I see something like this, I see a big move up bar like this, and then I see the prices coming down, getting close to that support. What I did was I dropped down to a lower time frame, and not to confuse you guys, but large bar up, subsequent bars hanging out about the 50% mark. I went to the lower time frame and I said, is there some kind of actual signal on that shorter time frame that can get me back into this bar? And you can see I did buy this here at 192.21 today. This is a 39-minute bar, but we moved down, we rallied back up, and then see this nice V2, this higher low V2. On dailies, I will wait till the end of the day to make my purchase. But on V1s, V2s, you know, I learned these from Kerry Lavorne. He can take them right when they trigger. So I decided I was going to take this right when it triggered. Here's day 1, day 2 washes out day 1. I took it right when it got to the day 1's trigger point. My stop would have been a halfway on this bar. And so I did buy it here at 121, 192.21. I did take a third of my profits here. Right here, I actually probably should take another third. So actually, I'm going to do that right now. And I will be getting out of this by the end of the day, but okay. 190. Let's see what that was. 193.59. So I don't trade intraday a lot, as you guys know, but it was a really good example. I mean, look, this is a daily and this is a 39-minute chart, but you don't know this. Let's just pretend this is a weekly. Here's a big weekly bar up. Next couple weeks comes down, test that halfway mark. I'll switch to the daily. In this case, it's 39 minutes, but I would switch to the daily and look for a proper setup. And this would be the setup. So anyway, this was a great trade. This was a great trade today from here to here intraday. But like I said, you don't see a lot of that from me, but I thought it was a good example of looking at multiple time frames, looking for big up range bars, having subsequent bars hanging out at the 50% of that because it should hold some support here. It won't always, but it should. And then switching to the smaller time frame and looking for an entry. So anyway, this was a great trade, and really glad I took it today. So that, everybody, is it. Having a green day today, which is good. And let's take a look. Sorry. Oh boy, I'm running bad on time, aren't I? All right. So listen. This is the time of the day where I do like to talk about trader psychology. It's very important, everybody. There's some really good Twitter channels out there that post some great things about trader psychology, trading words of wisdom, and one of the best ones for sure is our good friend Stephen Burns. Steve Burns at @SJosephBurns on Twitter. I'm sure most of you have subscribed to him by now, but if you have not, do yourself a favor, subscribe to him. When Steve speaks, I listen, and so should you. But I like this. I like this post that Steve posted. All traders will have losing trades and drawdowns in capital. Focus on managing and minimizing them, not trying to eliminate them. And guys, it's so true. You're never going to minimize. You're never going to eliminate losses. It's just part of trading, right? It is literally part of trading. But all you can do is you manage your risk. Try to keep those losses small. Try to let those profits run a little bit. But don't get upset when you have a loss or a string of losses. It happens. It's going to happen. It's just the cycle of trading. Right. But the key is not to get stabilized, not to get frustrated, not to make bad decisions and act out, revenge trade, all that kind of stuff. But look, all traders will have losing trades and drawdowns. It happens. It's not fun, but it happens. Focus on managing and minimizing them, managing those losing trades, minimizing those drawdowns, not trying to eliminate them. So anyway, good advice, Steve. Appreciate that. Hope that's helpful. Let's see, how are we doing on time? Jackson, how you doing, bud? Good to see you, sir. Dr. Long says, Etsy, first uptick in a while. Yes, definitely. We're going to look at that. Christopher says, what time frame is this on? I generally look at the daily time frame, Christopher. I did just show you a 39-minute time frame for that intraday trade that I took, but I generally don't show that. But most of the time, yeah, it's just the daily. Hey, Murray, good to see you. Nice to see you. And Jackson, good seeing you. Evan says, I know there was some negative news on Dollar Tree today. It's a good sign that it stayed up even with negative news. Absolutely. If you have negative news or perceived negative news and you have something going up, that's it's a strong indicator. You know, good relative strength. Christopher said, Mark Minervini talks about closing trades and not allowing them to turn into losers. That's right. That's exactly why I did it. Beware the SPX November regular options expire on the open tomorrow. Indexes move after protection goes away. Could be down. Oh, interesting. Thank you, Dr. Long, for sharing that. That's interesting. Christopher says, I'm long IYR. We have similar real estate trades. Yeah. Did you take it yesterday, Chris? Very, very similar. Looks like it pegged the 30, bounced, V1. Yeah, very, very similar. Hey, Bing He, how you doing, bud? Bing He said, took some profit on EMPH. Huge loss on ZYNE. Ugh. Okay, after the market closes, I'll definitely take a look at that. Murat says, the trade worked out well, Greg. I made 7%. I am not happy since it was bad execution. I used all my ammunition too early. With the price moved up, I continue shorting, but not at the peak. Okay, you made 7% though. That's at least good, right? Murat says, since I used my decided number of contracts already, I didn't want to use more margin, continue shorting the peak. Anyways, it came down. I closed the trade one by one. Good. You know, Christopher, 39-minute chart breaks down to 10 bars per day. Just a nice round 10 bar, like there's 390 minutes in the trading day. So 39 minutes gives you 10 bars. I was just taught that by Kerry Lavorne, but don't let me confuse you with that 39-minute chart because I rarely look at that. That was just a example of multiple time frames. But yeah, that's why 39-minute. Mert says, I kept one contract. I set the take profit and the price just came 1 cent to it and returned. I had to close 15 cents higher. All in all, I was not happy due to execution, even though I made money. Well, be happy that you made some money though, at least, right? Okay, I've been jabbing here, so let's get to it. I'm gonna have to get through these pretty quick. All right, Apple. You know, we talk a lot about Apple. It's just too high here. It doesn't give me a good risk reward. Down today. I don't think I've seen it down in a while. But you know, it's overbought levels. Doesn't mean it's going to go higher. Doesn't mean I want to short it. But I'm waiting for a pullback. I'm waiting for a pullback into value, some consolidation. I want to buy that first dip essentially. You know, between the 1 and the 1 ATR channel is where my preference would be in the value zone. Adobe up today, up against this third ATR channel, just too high here. Remember, 90% of prices fail here, so I would not be surprised, you know, if this was close to the top. Although, that being said, I'm not going to short this. I'm just analyzing this, but I want to see this pull back into the value zone in between the green lines. If it had a confluence of in the value, nice pullback into the value zone and a bounce off the 200, that would even be better. Man, Microvices just goes up and up and up and up. Boy, that is high. 82 RSI, just too high for me. Need to pull back into value. Amazon up a little today. Amazon's been relatively weak compared to the rest of the market. You know, really what I'm waiting on Amazon is a 550 SMA cross. That is a good back-tested approach, long-term approach to trading Amazon. The 5 is below the 50 at this point. So going forward, waiting for the 5 to cross back over the 50, or ideally looking for some kind of 30 RSI dip here, or possible higher low V2 if it heads back up. Boeing. You know, it was above the 200, a couple days down below the 200. Now we're back above. You know, you might say, Greg, I hear it's good to buy over the 200. Yeah, it is, but not at these levels. We're way too high for me to buy up here. Need a pullback. Remember I just talked about the large big bar? I would like to see it come down, hold halfway of this bar, and then look for a V1, V2. Caterpillar, you know, was just going to the moon, but it is starting to pull back, and we are now in the value zone, which always happens. It does come back to the value zone eventually. So I'd like to see it come deeper in the value zone, have some sidewards movement of V1, V2. The Dow kind of topping out here near the third ATR channel. We are still over a 70 RSI, which is strong, but I need to wait for a pullback into value. Disney had that huge monster day. Remember I told you that it's very extreme that you get to the 6 ATR channel or the negative 6 ATR channel, and this is right where it got. Doesn't mean I'm going to short here, right? Look at this big, huge bar. From a Fibonacci standpoint, I'll bet their buyers will be hanging out right here. Won't be me because it's just too high, but there should be some built-in buyers right around here coming in at the 50% fib level. Etsy, we're just talking about that. Look at this, finally had a bounce. Will it close above 30 RSI today? I do not know, but if it did, I would be interested in it. As a matter of fact, let me hurry and quickly do some numbers on this. This would under the 200 day, so I would take a half position. All right, so I will be watching Etsy if it closes above 30. It could definitely. Ford did not like the 200. You know, if we got back down here, we may have a double bottom with a bullish divergence. Don't know, but nothing on Ford today. Facebook, of course, I did take that intraday. I did enter here, got some out there. And this looks pretty bearish actually. So what I'm going to do, I am just so I have less to do at the end of the day, I'm just going to go ahead, lock that in. But that was a freaking fantastic trade, I gotta say. Oh, I put in the wrong amount. It left me with one share. Good thing I don't have to pay commissions on this. There we go. Look at that trade. That's fantastic, wasn't it? This looks really big, but it's on a daily chart. But from there to there, it still was 0.75%. So I am out of that intraday Facebook trade. I know you guys are all like, "What is going on?" Greg did an intraday trade, but It was, you know, again, we had the big bar up. In subsequent bars, it should hold 50%. I went down to a lower time frame, looked for a valid entry, and this was the valid entry with this V2. Five below. V2 today, day 1, day 2, day 3. Day 2 washes out day 1. Looks like it might close above day 1's close, but I wouldn't take this here, guys, because it just already rejected the 100-day above me. I don't like that, so nothing there. Gold, I was really contemplating taking this nice V1 here, sidewards movement, nice V1 over at the other support, but I did not take it. Can't remember why now, honestly, why I didn't take it, but it would have been a good trade. Oh well. Google, you know, had some issues with the third ATR channel, waiting for a pullback. Goldman Sachs, third rejection, like, you know, surprise, surprise. It does often get rejected there to show you kind of some overbought levels. Waiting for a pullback into value. Home Depot, nice move up. We have earnings coming. So nothing on Home Depot here. IBB, waiting for a pullback into value. Too high for me to do anything with now. Intel, too high, waiting for a pullback into value. And when I say pullback into value, I mean somewhere between this screen line and this screen line, the 1 ATR and the negative 1 ATR. Russell 2000, waiting for a pullback into value. We did have a trade back here on IWM when it closed barely above the 200-day in the value zone, which is what I like. If I was wrong, gives me possibility of being wrong very small. It did hold the 200-day. It was support. It did hold, and we scaled out. We took this trade, and I scaled out, got out here when we went above the third and under the third. Johnson & Johnson, of course, told you about that. I did get out of this intraday when it got back to my break even, but we did lock in up here. So all in all, this is a profitable trade, but I am done with Johnson & Johnson. We'll see what happens tomorrow. Could get back in with the V2 tomorrow. Coca-Cola, I was looking for a 30 RSI, didn't quite get there. It's bounced, nothing there. Lockheed Martin, just strong, isn't it? Too high for me. MasterCard, having some problems with this 1 ATR channel here. Really nothing there. It's pretty range bound at this point. McDonald's, of course, I told you that I sold put down here down to 180. I did sell it. I did sell that put yesterday when we closed back in to the value zone. That was my signal, and we closed over the 10-day moving average, and MACD was positive. So Altria, we need to pull back into value. Merck, now we've made a lower high. This is lower than this high. So for me to get involved in another V1 or V2, I'd have to wash out this low. Whenever you go out of the value zone into the value zone and you have a rally, well, that's good. But if that rally fails and makes a lower high, then I need to wash out that previous low. Microsoft, extremely strong, right at the third ATR channel. Very likely that it might run into some resistance there. It's a combination of the third ATR channel and the 70 RSI. So it has a lot of, it's going to be tough for it to go higher. Doesn't mean it can't, but you have a confluence of a third ATR channel and a 70 RSI. That's pretty strong. Netflix. You know, I talked about that big, large bar. Well, here we have a big down bar. When you have a large down bar, most likely you're going to find resistance at the halfway. But it looks like we're be able to close above the halfway of this bar, right? So let's just say this was a weekly chart, and we had this big week down. Then in subsequent bars, we were hanging out half of the week. I would go to the daily and look for a V1, V2 to the downside if I want to short that. But nothing here on Netflix. Nike, nothing there on Nike. Philip Morris, lower high. See how this high is lower than this high? In order for me to get interested in this, I would have to wash out this previous low and get a V1, V2 down here, most likely, but nothing there. PayPal very strong today. Looks very close to having a 520 crossover. I can't remember how this back tests. And I don't have time. Do I? No. If I, well, we'll see. I'll get through the rest and we'll come back. But other than the crossover here, it doesn't make sense. Shoot. Let me just look at it real quick. This is from etfreplay.com. I do my back testing on here. It's really great, platform to do back testing. The 520 EMA crossover does not work so well. So you can see the back test only 14%, the actual buy and hold 199, and the drawdown was more than the buy and hold, which you don't see very often. So good thing I checked that out. Doesn't mean it won't work this time. We do have a MACD crossover, but I'm just going to let that one go. Qs just too high, need a pullback. Silver, I was trying to be patient, waiting for 30 RSI, didn't quite get there. SPY, of course, had that small overnight loss, going to be buying that again at the end of the day. Bonds have rallied really strong. That's why you're seeing real estate rally here. Now we're in the value zone. I would wait for a pullback, ideally a couple-day pullback, and look for higher low V1, V2. Tesla, just too high. Twitter, just been consolidating. This thing's going to move strong one way or the other. I just don't know when or in what direction. UNH, too high, waiting for a pullback. Oil, this is what Murat shorted, I believe, if I'm correct, Murat, right? VIX trade looks like it might close under the 30 RSI, in which case I'm going to have to go ahead and get out. But I am glad that I did get the one profit target. Verizon, nothing there. Walmart, look at this, guys. Had earnings, huge earnings, completely reversed. Now it's negative on the day. This thing was up like 3 or 4%. So, people that held through earnings and got out are happy, but people that did not sell yet, not so. I mean, this is very bearish. Energy, energy, we were above the 1 ATR channel, coming into the ATR channel, stopped going down, kind of holding this range. If we had a V1 or V2 tomorrow, I would take this. I would potentially take this. Financials, no. Real estate, we have. Get up there, baby. You can get that second profit target. I believe in you. Utility, very strong, and healthcare. So that only gives us, look at Cisco, guys, on the earnings. If you would have held through earnings on this guy, you would have lost 7.2% so far. Etsy, doesn't look like it's going to get the 30. I mean, it might. We'll watch it. Facebook, I took that intraday trade. Good thing I got out when I did. But yeah, I mean, that's why I like to take profit targets at different areas, and got one right near the top. But that's it for Facebook. So it looks to me like the only potential is Etsy. Okay, let me look real quick, you guys, some of the charts. So Mount Doji, no, I would not. I mean, yes, it is a V1 closing over the 50, everything, but there's no sidewards. There's no sidewards movement here. So me personally, I would not take this. I mean, it's nice. It's over 50. It's over the moving averages for sure. I just don't like these two big down bars like that. So anyway, just my opinion there. Same thing. Yes, it's a V1. is in value, but I didn't have any sidewards movement. I'd much rather see sidewards movement, Mount Doji. That is much better. That's my favorite one of all, other than it's a $5 stock. But, you know, I do like this. We had sidewards movement here. We had a V1. Looks like it's going to close above, possibly close above the 50. Gives you a good risk to reward ratio. Halfway here has the 50 under, the 200 underneath it. Yeah, I like that one the best, Mount Doji. Oh, Steve, you bought the break back over the third ATR channel. Well, it looks like your ATR channels must be a little different than mine, because mine is not back over. But, you know, I get asked this a lot, but, you know, if your indicators are a little slightly different than mine, just stick with what you have, right? Stick with what you have. So interesting, Steve. We'll have to trade notes on your channel compared to mine, because you can see on Etsy, you see how mine's not quite there. Maybe you're using EMA. I'm using SMA for my third ATR channel, so maybe we should trade notes on that. But anyway, good luck, bud. Appreciate it. MJ, it's broken back above my negative third ATR channel too. Huh. And Jackson set to SMA. Interesting. I don't know why that is. All right, I better take care of business here. Dollar Tree's fine. Johnson & Johnson I already sold. SPY, going to be buying that at the end of the day. VIX does look like it's going to close under 30, so I'm going to have to get out of this, take a small loss, but happy that I did take some up here. That's one of the reasons I like phasing. If it closes back above the 30 tomorrow, I will buy it again. XLRE, doing great. Get up there. You can hit that. And that's that. That's that. So yeah, nice profitable day today. I'm happy with that for sure. So, okay, I have my VIX ready to get out of. Steve says, mine's the third standard deviation Keltner channel, 200-day SMA. Yeah, that's exactly how I have mine set. Merritt says, some Keltner channels are separated 1.5 ATRs instead of 2 by default. Oh, I see. Merritt says, check it. My setting is 2310. Yeah, that's correct. Huh, interesting. Interesting. Oh, Steve, maybe it's that 10 value that you have there. You see how my values are 20 and 3, and it's based upon simple moving average. So I think it's that 10-day, Steve. I don't have that option, so that's clearly the discrepancy. All right, where do we end up? Very nice. Very nice today. That's good, because it's been pretty choppy for me the last few days. All right, so I did sell VIX with the close under the 30, so I'll be watching for that again. You know, tomorrow if we had a V2, I would consider it again, because then we'd have a V2 entry and we would have close back above. MACD did go positive too, so that's kind of interesting. So Dollar Tree, bad news, still up. That's good. SPY, where did I buy the new SPY? 309.55. You know, I did want to point something out. You know, people who have read Trading in the Zone by Mark Rogers says, look, you're going to place a trade, something's going to happen. I don't really have any expectations that it's going to go up or down. I just know something's going to happen. And this is very true for me on the SPY trades. I take the trade every day. I honestly don't think, oh, I think this is going to go up this time, or, oh, I think it's going to go down this time. I really don't. Although I am guilty when I take other positions where I think, yeah, I think this one's going up. That's probably a mistake. I mean, it's human nature. But seriously, on the overnight SPY trade, I don't anticipate anything that it's going to go up or down. I know something's going to happen. I'm going to win or lose. But what I do anticipate is over time, it's going to be profitable. But on normal trades, like regular normal V1, V2s, breakbacks, all that kind of stuff, I do have to admit that I kind of do have a bias that, you know, it probably will go up and it won't go down. But me personally, I probably have to work on that as well and just look at this more like a SPY trade. But, you know, Mark Rogers suggests, you know, wait for your setup, know your risk, take your trade. Something's going to happen. You can't expect it to be up or down. But over time, if you have a good trading approach and edge, it will. And so anyway, very different mindset I have between the overnight SPY trade and just, you know, like a regular one of my V1s, V2s, or something like that. All right. So listen, before I get to comments and questions, just do want to let everybody know, you know, I do my little plug each day, but I do want everyone to know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. They're one-on-one lessons, just you and I, they're live. I teach you everything I've learned over the last 24 years as a full-time trader. I have worked with some of the best in the industry, with some great traders like Steve Burns and Dr. Alexander Elder and Kerry Lavorne. And in my course, you know, I teach you live, not just a course that you watch, right? But it's live, back and forth, everything that I've learned. I've had really good success with my students. I think they're very happy that they've taken the course. So, you know, if you're interested and you want to have a little deeper understanding about how I trade, please reach out to me. You can reach out to me by email, or you can reach out to me on Twitter. But it's 5 2-hour sessions is the course. Five days, 2 hours per day. Although a lot of time it goes 2.5, 3 hours, because I want to really make sure that you're understanding what I'm teaching you. Yeah, I think it's good. I think it's very valuable. It's $1,000, but I think it's very well worth the money for what I teach you and how intense it is. So, you know, if you're interested, if you've been thinking about it, let me know. I mean, it generally just starts with a initial Skype call. Doesn't mean you have to commit to the course, but I'd like to interview a potential student, and I'd like them to interview me as well. I'd like to know, you know, how you got into trading, what your challenges have been, what your goals are, and then I'll put together a lesson plan to help you achieve those goals based upon your financial situation, how much screen time you have, things like that. And then, of course, you can ask me anything as well. So if that's of interest, please let me know. Also, if you enjoy this channel and you haven't subscribed, I would really appreciate it if you would subscribe. And if you found today's podcast valuable, please do me a favor, hit the thumbs up button. That way I know that you like the content. You know, YouTube takes a look at the likes, and if you have more likes, it's thinks in its algorithm and goes, okay, this must be a valuable channel, and so it puts it out there a little bit more. A lot of people out there that need help with trading. I think it would do them a lot of good if they could find this channel. So you know, like I said, if you like today's content, if you think it's valuable, please do me a favor, hit that little thumbs up button at the bottom there, and I would really appreciate it. So, all right, that's that. Frank says, to me, trading on margins like trading with the dynamite stick. Yeah, you have to be pretty careful when you trade on margin. I mean, I think there are some advantages to it if you're experienced, but yeah, I don't like the concept either, to be honest with you, Frank. Mount Doji says, I see so many engulfing V1s today. Yeah, like the one that we just looked at, Mount Doji. Jackson says VXX is close, G, still above. So on mine, you can see it's down below, right? And again, I do want to mention my charts, for whatever reasons, may not line up identical to yours. It doesn't mean mine's wrong, mine are right and yours are wrong, or vice versa. But whatever you have, just stick with it and be consistent with what your charts. My concern is if you look at mine, it might distract you and you might think, oh, Greg says this, mine says that. Just stick with what you have. Merritt says, by the way, Greg, thanks for your advice. I appreciate it. I do a lot of losing or winning scratch trades with small losses until I am at the right side of the trade. Then I scale in. Yeah. Small losses and scratch trades are completely acceptable in trading, right? What's the formula? Large wins, small wins, scratch trades or break-even trades, and small losses. Those are all acceptable, and you're going to run into all of them. What you really want to stay away from is the large trades. Those are the killers. That's what will damage your account. Yeah, Mount Doji, the sidewards movement's important. I mean, why is it important? Sidewards movement shows that it has stopped going down, that it is at least having an equilibrium of buyers and sellers, right? That's what's very important, because if you have something, let me go back up to your PEI. Yeah, so GNTX, yes, okay, we went above the 1 ATR channel. Yes, we've come back down here, but I would much rather see it go sideways, showing that the selling pressure is over. Here, this is just a bounce. This is just a V. See it's a V? I mean, of course, don't get confused because I call it V1s, V2s, but honestly, this washout is not good enough anyway. But I would much rather see it come down, move sideways, right? Show that it has some stability, then have one bar down and go back up. This is just a V. This is just a bounce. And a lot of times those bounces fail because it doesn't have any days of support or sideways movement under it. So I hope that makes sense, Mount Doji. So Steve says my settings 23 and 10. Yeah, I think the 10 is the difference between our charts. Hey Jesse, what's going on, bud? Good to see you, sir. Always nice to have you here. Hope you're doing well. Gamer Squad says my 20 looks like yours, Greg. Okay, so your third ATR channel, Gamer, looks like mine. Kind of glad to hear that. Kind of thinking my charts are wrong. Merritt says, Mark Douglas. Oh, did I say Mark Rogers? Sorry, Merritt. Sorry about that. Thanks for correcting me. Mark Douglas. That's right. I don't know where I got Mark Rogers from. Maybe I was thinking about Green Bay Packers with Aaron Rodgers. I don't know. Yes, Mark Douglas. Just correcting if there's anybody who doesn't know about the book, Trading in the Zone. And great point, Merritt. Trading in the Zone is such a great book. It's one of my favorite books on trading psychology. You should really listen to it. He has some courses, free courses online. I believe he's passed away. But Mark Douglas is fantastic. I suggest that to all my students to listen to that book. It's very, very important. But thank you, Murat, for correcting me so we don't mislead people about if they're looking for that book, Trading in the Zone. Stock chart documentation stated Keltner channel, EMA multiplier, ATR period. Yeah, in mine being I don't have I don't have that third option. Let me take a look. So bars used in average. The factor is 3, and it's based off a moving average. So those are off a simple moving average. So here you have EMA. And again, if you use EMA, I have no problem with it, just as long as you're consistent with it. But yeah, this only gives me these values here, the 20 and the 3. Jackson says 20 SMA, multiplier, true range. Evan says, I took a half position in ATVI today. Okay, so how low did we get? 38. Well, first of all, Evan, I hope this goes up for you, obviously. We did have a V1 yesterday, which is positive, right? I don't think it was low enough for me to take this kind of V1. I don't think it was low enough RSI wise. I would have preferred it to go lower, under 30, over 30, or ideally go under the the 100-day and close back over the third day. I don't think I would have taken it today either. But listen, doesn't matter whether I would have. You took it, so just to make sure, you have a plan for where you're going to get out of this. I mean, yesterday was the V1 bar, was the washout bar. If it were me personally, I'm not telling you what to do, but I'm just saying if it was me personally, I would use a close below yesterday's washout bar, a close below halfway of yesterday's washout bar. And I would be targeting like the 50 RSI or the 50-day moving average to the upside. If it moves up and it rejects the 50 RSI, I would probably take profits. If it closed above the 50 RSI, but also closed above the, but then got rejected at the 50-day SMA, I would also take that. And if it closed above those, and I would just keep it and trail it with the close below the previous day's low. But I don't think I would have taken this today personally. Watch and see how it reacts with the negative 1 ATR channel above it. Let's look at the weekly. Well, it does have some support, the 200-day weekly. That's good. I do like that. I like it better now inside the value zone. So just, be careful. Be careful if it fails tomorrow. And like I said, if it were me, I'm not giving you advice. I'm just telling my opinion. If it were me and I had bought today, I would wait. If I had a close below the halfway mark, I would probably take my loss there. But hopefully it doesn't happen, Evan. Jackson says, I am listening to Trading in the Zone. 3rd listen this year. Good job. Nice going, Jackson. You can't listen to that book enough. Every time I walk each day, every listen I get something more out of it by Buck Rogers. I mean Mark Douglas. I think that's going to be an inside joke now for us, right? Yeah, there's so many good things about that book. So many nuances of that book that you could listen to it 10 times and get something out of it each time. But proud of you, Jackson, for listening to that. Jesse says, Etsy closed on my chart, did not close above the third ATR. It's dead even with it. Oh, so Jesse's chart's even different. I think it has to do with that multiplier, or not the multiplier, but that 10-day. But again, guys, just because my chart says something different than yours, it doesn't matter. You just have to stay consistent with what yours are. I mean, you know, sometimes it might work out better for you. Sometimes it might work out better for me. You know, let's say that tomorrow Etsy goes down, and everybody that took a position in it lost money, and I didn't get in it because it did not close above and I didn't lose money. Okay, maybe that works for me in that time. But what about tomorrow if it goes skyrocketing up? Well, then it works for you because you got in it, but I didn't get in it. See what I mean? So it washes itself out in the end. Sometimes different chart readings are going to work for somebody. Sometimes it's going to work against them, but just stay consistent with what you have. Don't obsess about, you know, the settings exactly, because just be consistent with what you have. You're welcome, Evan. Jesse says, my Keltner settings are 0 displacement, the corresponding factor, 1, 2, 3, and so on, and the length of the simple. Yeah, that makes sense. Bing He says, Greg, when you cut loss, do you still use market on close order type, or do you use market orders to get out with the last hour? So that's a good question. If it looks obvious, Bing He, that it's going to stop under my, it's going to close underneath my stop. Like if I can look a couple hours into the future, you know, let's say on VIX, for whatever reason, let's say my stop was here at this dotted line, and with an hour and a half to go, it's way down here. Well, I know almost certainly that it's going to close below my stop. So you can put in market on close orders until 15 or 20 minutes before the market closes. So if it looks obvious that it's going to close under my stop, I'll put it in the middle of the day, just so it frees up time at the end of the day, just so I have less transactions at the end of the day. But if it's close, like VIX, right? I was a close under the 30, I was going to get out, but with half an hour to go, it was dancing around the 30. So I couldn't just put a market on close order in there, because it would be too mechanical, right? I have to override it and manage it if it's very close to my stop at the end of the day. But if it's very clear that it's way away from my stop or under my stop, then I'll just put the market on close order in even earlier in the day. Like the SPY. I know I'm going to buy SPY at the end of the day always. So when I get up, I just put a market order, an MOC order, to buy the SPY at the end of the day, just so I have one less thing to do. But remember, 15, I think on my platform, it's 15 minutes before the end of the day. I can't put a market order in less than 15 minutes left, so it has to be manual. So market on close order, if it's definitely if it looks very clear that it's going to close under my stop, it's not close. But if it is close, then I don't have a market on close order, and I have to just wait till the very end, do my best, and then I just use a market order, Bing He. Dr. Long says, markets tend to up first on expiration, but players that are long sell calls and buy puts, causing markets to break back. Okay, let me read that again. Markets tend to up first on expiration, but players that are long sell calls and buy puts, causing the markets to break. Oh, interesting. Interesting. Let me look at Dr. Long's post way back up here. Okay, so Dr. Long said, beware that SPX November regular options expire on the open tomorrow. Indexes move after protection goes away, could be down. Huh, interesting. Yeah, we'll have to watch that, see what happens, Dr. Long, but thank you for that. Murat says, if everybody put market on close orders, what would be the closing price? There will be no price match since there will be no closing auction. That's a good point, because sometimes I put market on close orders in, and I get a different price than what the closing price was. So, I mean, let's just test this. SPY closed at 309.53, and my market on close was 309.55. That was my confirmation, 309.55, even though the market price is 309.53. So honestly, Murat, I'm not exactly sure what the mechanism is of how that works, but I do like market on close orders because it frees up how many orders I have to do. And of course, if I have 2 or 3 stocks that are very, very close to my stop, and I trade 2 accounts, and so essentially I have 4 or 6 executions I have to make, just having one of those that will just automatically buy at the end of the day is a real time saver and a lot less stressful for me. He says, if it is very clear that it is below your stop loss, why not use market order to get out immediately anytime within the last hour instead of a market on close order? Yeah, it's a good point, but I just try to keep it simple and wait till the end of the day because, as I mentioned each day, the large market, the real big buying comes in those last few minutes. And, I understand. If it's way below, then why not just hit the sell button and get out? Because sometimes, not all the time, but sometimes, you may be down 1%, but it might rally in the last 15 minutes instead of being down, instead of having a 1% loss, maybe you have a 0.5% loss. But again, I just try to streamline things, make a rule. I'm waiting till the end of the day. Otherwise, I'm going to be tempted, or I'll have the impulse to have to do stuff all day long, and I just don't want to do that. I mean, of course, I have a 5% emergency stop. I've talked about that. If intraday if it goes down 5%, I will immediately just go ahead and get out. But it really comes down to just having a methodology that I follow that makes things simple for me. So I don't have to go, well, should I not sell it? You know what I mean? So that's the reason why. Does that make sense? Jackson says 15-minute limit with MOC is same with my broker. Okay. I tend to use it as a conditional market order to overcome this when possible. I buy SPY 10 seconds below the market close. Great. Yeah. You don't have to use, listen, if I didn't do this podcast, I probably would use less market orders, market on close orders. But because I'm having to do the podcast and back and forth between screens and a lot of things going on, it just simplifies it for me. Dr. Long says every trade has 2 sides, buyers and sellers trade market. Yeah. Yeah, of course, right? I mean, of course, every trade has 2 sides, but that makes sense. So there's people that are selling market on close, and there's people that are buying market on close. Murat says, these zero commission brokers do not buy and sell every order at the exchange. They sell order blocks to high frequency traders, so the price differs slightly from broker to broker. Yes, that is true. It's interesting, Murat, that you bring that up, that, there are some brokers like Robinhood and others that they will look at your results as a trader. And if you're a winning trader overall, and I'm not sure what the metrics are of how they analyze this, but if you're a winning trader and they get an order, they'll pass it along to the exchange. But somewhere in their algorithm, if your account is a losing trader, they will not send the order to the exchange. They will just take the opposite side of your order because they think you're a poor trader. And so it's an edge for them. Does that make sense? It's crazy, huh? Bing He says, I think the last few minutes really make a difference. I noticed price trend to rally. Not sure if I am right. Maybe now they're rallying, but there will be times where there will be selling off also. Jesse says, yes, they will siphon orders to market makers to make money. Yeah, you know, even though zero commissions now, you know, these brokers still will get some kind of commission by routing the orders to certain market makers. Jackson says, can't wait till they offer free commissions in Australia. Not quite comfortable wiring my money to the U.S. limited to interactive brokers here. You know, it's interesting. I have had discussions with people in other countries, and they are concerned about wiring money to the United States. You know, for us people that live here, it sounds a little strange, but it makes me think, they're concerned about wiring money to the United States. Should I be concerned? Hey, is it just me, or has the market gone on this crazy run ever since there's zero commissions? What do you guys think? Seems like it's pretty closely correlated to when the free commissions came in. Am I crazy thinking this, or have you guys noticed this as well? Frank says, stops are like seatbelts when driving. So true, Frank. You know, that's the thing with stops. The fewer stops that you use, if you didn't use any stops, your winning percentage is going to go up much higher. You're like, hey, that sounds good. But the problem is, if you don't use stops ever, eventually you're going to get the one that blows up your account. That's the rub. Jesse said, I sure passed on a lot of stocks in my list that are above the 1 ATR at least. Yeah, I know. But remember, once you start getting above that 1 ATR, Jesse, you know, that rubber band starts to pull pretty tight. And, you know, if those stocks go up tomorrow, you're going to think, I wish I would have taken them, and maybe next time you will. But, you know, that's why I taught you that. Generally, it is not overall, it's not a good idea to buy stocks over the 1 ATR. I do buy those. I give a little bit more leniency when I have a price, when I have a crossover that closes above, because it's a little bit longer term. What examples, Jesse, are you talking about? Murat says, I think it is just coincidence. The ones who move the market are not concerned about the commissions anyway. That's a good point, Murat. Dr. Long says, shorts give up end of day. Yeah, maybe now. It's not always going to be that way. There are going to be times when the market changes where you're going to have accelerated selling at the close. I guarantee you. I just don't know when. The concern is basically because my money is outside of Australia. Interactive brokers have local bank accounts, so it's like having money in local banks. I see. Jackson said, if I lived in the U.S., would not have an issue at all. Okay, makes me feel better. Jesse said, in reference to your market crazy thoughts, market going crazy thoughts. In reference to your market going crazy thoughts, G. Oh, I understand. Okay, that makes sense. Do you have any trades, Jess, going on? Do you have any trades? And if Kurt's out there, do you have any trades? Or Anthony? Jackson, any trades at all? All right, well, listen, I'm going to start saying goodbye. So, Jesse, thank you, sir. Appreciate everything. I hope you're doing well. If you have any questions, let me know. Jackson, thanks, bud. Good talking to you every day. Look forward to it. Dr. Long, thank you for your comments today and insights. Appreciate that. I hope you keep coming back. Murat, thanks, bud. And good job on your trade. I did respond to your Twitter, and even though that short setup, but please read what I said about the bearish divergence. There was no divergence there yet. Frank, thanks for coming. Thanks for all your comments. Appreciate those always. Being he, thank you, sir. Hope you have a good day over there in Singapore. Man, we have such a great group. Really appreciate you guys coming every day. Evan, thank you, sir. Hope that helped. Taking a look at that trade, but I hope that goes up for you. Gamer, good to see you, my friend. Hope you keep coming back. Steve, good to see you. Good luck on that Etsy trade, bud. Always a pleasure, honor to have you here. I'm always excited to have you here, and like I said, I know everyone else is. I say that every time, but I really do mean it. Mount Doji, thanks for coming, my friend. Let me know about your trades. Love to follow everybody's trades. And Christopher Hitchin, good to see you. Thank you for coming by. If you have any questions, Chris, don't be shy. Just please ask me. And Christopher Earl, thank you for coming by. Pleasure to have you here, an honor to have you here as well, Chris. And remember, that's 10-Minute Stock Trader on Twitter or on YouTube. But great to have you, Chris. And Marco, there's our good friend Marco. It's good to see you. If I can ever help you, Marco, you just please let me know, okay? And Toby Petty, great to see you. Thanks for checking in and saying hi. All right, guys, I'm going to go take a walk, hike with Katie, and yeah, looking forward to it. So go out and do something nice for somebody today. Hold the door open, say hi, let them into your lane if you're driving. Just something nice, right? It's good for them, it's good for you. And glad we had a good, profitable day today. And so look forward to seeing you tomorrow during the last hour of the day. So take care, everyone. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.